What is it likely to do? Okay, it's going to move a lot of momentum, one directional, at very specific times between 10 o'clock and 11 o'clock in the morning. Why? Why does it do that? Because at the 9:30 opening, a lot of orders come rushing in. Big trading firms and clearing houses, they funnel a lot of orders in there because why? There's liquidity. Everybody's chomping at the bit to get in or get out based on that opening price. And that brings in a lot of liquidity that allows for order flow to come in real quick. But it will evaporate quick. So what does it do? It uses that initial surge of inflow of orders to run to the obvious liquidity that's above or below the marketplace. What is it reaching for? Many times it's the opposing direction of where the daily range will reach for. So an example would be you're looking at a marketplace and your ideal scenario is you think the market's going to go higher. So you're not trying to go short. You really want to wait and see what it does at the opening price. That initial opening, 9:30, opening bell, everybody's in there clamoring to get in there and do something. All kinds of order flows coming into the marketplace. Boom, 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 boom. That will evaporate. So what is it going to do after that initial surge of interest and all the clearing firms that come through with their orders hitting the marketplace in the first 15 to 30 minutes? What is it going to do? It's going to reach for the resting pending orders above the marketplace, above a singular high or above relative equal highs. So what is that initial move dropping down at 9:30 to 10 o'clock? Judas. It's fake move. So you're waiting for all that stuff. But then at 10 o'clock and 11 o'clock, you had that distribution phase of the morning price swing, where whatever it's going to do in the morning going into New York lunch, it's going to be directional and it's going to run real quick into that buy side up to, but not limited to, 11 to noon, New York local time. Now, that is a very generic perspective to hold in the marketplace. But if you look for that when the market's predisposed to go up, you got it locked. The only thing you're waiting for is a fair value gap to wait for the price to drop down into on a 5, 4, 3, 2, 1 minute, or if you're inclined, less than a 1 minute, 15 second, 30 second, 45 second, 5 second time frame. It's not complicated, folks. It's really, really simple stuff. But the complication comes with you're trying to find where COT fits in all that. Where does the commitment traders fit in all this, ICT? I'm really struggling with the break of market structure. Where's that in the turtle soup? I'm sorry, not the turtle soup. Where's that in the silver bullet? It's not there. You're looking for liquidity. You're looking for liquidity. You literally can wait between 10 o'clock and 11 o'clock and say, okay, what has already happened? Sell side's been taken. All right, am I bullish? Weekly expansion is likely to, I'm wanting to see that weekly candle go up. Okay, then I have a selection that I want to be a bull. I want to be buying only. So you filtered out every shorting opportunity. I don't care how good it looks, you're not taking it. And that's going to be hard for you to see a lot of these really dynamic sell-offs. You just watched me short the S&P the other day, and the NASDAQ was saying, no, S&P, you're crazy. I'm not going down there like that. I'm not going down like that, okay? I'm not going out like a fool. I'm not going down like a chump. I got somewhere to be today. And I'm very proud of you that I sent out that Mount St. Helens picture. That was a subliminal little marker for my students. It's getting ready to blow up. And NASDAQ was doing what, relatively? It was saying, no, I'm not interested in going down. So it was what? The relative strength leader to the upside. So I shorted the weak one. Didn't get it, went right down to my price, but the spread didn't let me get out. That's the price of precision sometimes. The difference between the spread, the bid and ask. But that's okay. To me, I think it's fun to be that precise, to have my order sitting right there, and I've already taken a profit, so it doesn't matter if it takes the terminus out. I don't care. But if it turns around there, guess what that proves? It proves visibility. It proves conceptual idea that it can be timed. There is sound logic behind it. And I was so precise, the only difference between me getting that fill was the bid and the ask. How much better can you be, but not get the mark? You can't get any closer to it than that, right? So that's the right perspective. So when you have that, and you see me now, I guess that's the second time you see me do it this year, where I've had a resting order in, and just the spread denied me the actual exit on the limit order resting. But some of you get mad about that, and you're like, oh, what's the perspective to hold with this? I'm angry about this. Don't get angry. You should be thankful that you have the laser guided precision to even to include a limit order there, where nobody else in the retail universe would ever have that. They're looking for, wedges and bull flags and inverted head and shoulders, and I gotta stop. But you have really the easiest thing in the world if you're trading silver bullet. In Robbins, that's all I'm doing. I'm not doing anything. I'm not bringing out Enigma. I'm not doing Model 2022. I'm not doing Artemis patterns. I'm not doing, Reapers. Nothing, but just simply silver bullet. Because in my mind, when I created that, like, I wanted it to be so easy for my child to be able to see it, know what time it's going to be there. So that way they're not anxious. They're not anxious to worry about, am I going to miss the move? Because think about how much you're fearing all the time. Your FOMO is off the charts. Any given day. Man, I hope ICT tweets about what if ICT could just tell me in a tweet to note this level, I'm going in. I'm going in. I'm not going to have any reservations. I'm going to take that trade because ICT is pointing to that liquidity. He's basically telling me, signed, sealed, delivered, it's going to happen. And for some of you, that's what you're afraid of with me not being around doing anymore. And you shouldn't be afraid about that. This is that next logical step in your development where you, as that eaglet, is getting pushed out of the nest. And it's scary. The eaglet doesn't know what's on the outside of that nest. And it fights its parents when it's being pushed towards the edge of the nest. It's never been outside to know that it's dangerous. It's never known it. But it knows enough to know, I don't want to be out there. I want to be close to you. This is home. I want to be close to you, mom and dad. But nonetheless, that eagle is not meant to be in a nest forever. God gave it wings to fly. And it can't use those wings until it's pushed into a situation where it has to use them. You have the tools. You have been given the instructions. You've been given the mindset, how to look at things, how to avoid certain things, how not to think about these things that create pitfalls in trading. That's what I've talked most about, because that's the very thing that's going to be your undoing. It's not going to be your winning. It's going to be how you think about what you didn't do right, or that you did right but wasn't good enough. And what is that going to do? FOMO, fear, greed, over trading, over leveraging. And all of those things are going to be your downfall if you allow them. If you've taken everything I've ever said, either in text or in audio format, whether from a video or like this on Twitter Spaces, I probably wrote dozens of books already by now. But none of you would have been willing to pay any amount of money if I said trade psychology according to ICT. There'd probably been a handful of you that probably would have bought it, but most of you wouldn't have. But the real secrets to precision order block entries. Oh man, that's the one that's on the top sellers list. I'm the #1 bestsellers list on everything, right? But that won't help you. See, if you stay in the game long enough, you're going to find what you excel at. And you're also going to learn the things that you do incorrectly, that you're prone to repeating over and over again, like trading without stop loss, or trying to be better than the next person because they have more attention given to them. And you do reckless things. And those reckless things are the very barriers to your success.